Inflation can feel like a hidden thief, quietly eroding the value of your hard-earned money over time. But what if I told you there are ways to protect your wealth and even grow it, no matter the state of the economy? In today's video, we'll explore what inflation is, how it impacts your money, and the best investment strategies to safeguard your wealth. 1. What is inflation and why does it matter? Let's start with the basics. Inflation is the rate at which the general level of prices for goods and services rises over time. This means the same amount of money buys less than it did before. For example, what you could buy with $100 a decade ago might now cost $130 or more. Inflation isn't inherently bad, it's a normal part of a growing economy. But when it's too high, it reduces the purchasing power of your savings and investments. This is why understanding inflation and taking proactive steps to combat it is essential for long-term financial health. 2. The impact of inflation on your money. Inflation doesn't just affect your ability to buy goods, it also impacts your savings and investments. Money kept in a traditional savings account with low interest is particularly vulnerable because the rate of inflation often outpaces the interest earned. Over time, this means your money loses value, even if the balance remains the same. Understanding this dynamic is the first step in preserving your wealth. It highlights the importance of seeking investment options that outpace inflation. 3. Invest in stocks for long-term growth. Historically, the stock market has been one of the best tools for beating inflation. While stocks come with risk, they also offer high growth potential, especially over the long term. Companies adjust their prices to match inflation, which helps stocks retain their value. Focus on investing in well-established companies with a track record of steady performance. Alternatively, index funds and exchange-traded funds, ETFs, provide a diversified, low-cost way to invest in the stock market and achieve growth that keeps up with or surpasses inflation. 4. Real estate as a hedge against inflation. Real estate is another effective way to protect your money from inflation. Property values tend to rise over time, often outpacing inflation. In addition, rental income usually increases as the cost of living goes up, providing a reliable source of income and capital appreciation. If owning property outright feels overwhelming, consider real estate investment trusts, REITs. These allow you to invest in real estate without the hassle of managing properties directly. 5. Precious metals for stability. Precious metals like gold and silver have been used as a store of value for centuries. During periods of high inflation or economic uncertainty, they often perform well because they hold intrinsic value. While precious metals don't generate income, they can be a safe haven for preserving wealth when other markets become volatile. Consider allocating a small percentage of your portfolio to gold, silver, or other precious metals as a hedge against inflation. 6. Treasury inflation-protected securities. Tips. Treasury inflation-protected securities, or TIPS, are government bonds designed to keep pace with inflation. Their principal value adjusts based on the Consumer Price Index, CPI, ensuring your investment retains its purchasing power. TIPS are an excellent option for conservative investors looking for a low-risk way to combat inflation. They provide steady income through interest payments while protecting the value of your principal. 7. Diversify with commodities. Commodities like oil, natural gas, and agricultural products can also serve as a hedge against inflation. When inflation rises, the prices of these goods tend to increase, boosting the value of commodity investments. You can invest in commodities directly or through commodity-focused ETFs, which provide exposure to a range of assets without the need to trade physical goods. 8. High-yield savings and CDs. While traditional savings accounts might not keep up with inflation, high-yield savings accounts and certificates of deposit, CDs, can help minimize the impact. Look for accounts with competitive interest rates, preferably in online banks that often offer higher yields. Although these options won't completely shield you from inflation, they're safer alternatives for short-term savings compared to keeping cash under a mattress. 9. Diversification is key. No single investment can completely protect you from inflation, which is why diversification is critical. Spreading your money across different asset classes, stocks, real estate, bonds, precious metals, and more, reduces risk and ensures that your portfolio is better equipped to weather economic changes. 10. Stay educated and informed. The economic landscape is constantly evolving, and staying informed is essential for protecting your wealth. Regularly review your investments and adjust them to align with your financial goals and the current economic climate. Keep learning about new financial tools, strategies, and trends to stay ahead of inflation. Knowledge is one of the most powerful weapons you have against wealth erosion. Inflation doesn't have to erode your financial security. By understanding how it works and implementing strategies like investing in stocks, real estate, precious metals, and tips, you can preserve and even grow your wealth. The key is to act proactively, diversify your investments, and stay informed about the best ways to protect your hard-earned money.